Many of you have asked me for an update on my 20x stock. This 20x stock has about 11x to go. I still believe the stock is only getting started. So a lot of you guys asked me, have you sold it? What have you done with the stock? And for me to give you some kind of a fair value and let you know if I believe the stock is still a buy at today's price. So I'm going to talk about it today. And I really hope you enjoy it as always. Now, when I first talked about the stock, I compared it to Nvidia. Because if you look at the massive trends that we had in terms of AI, a lot of people and a lot of companies are trying to come up with AI models and they're putting in all this capex and all this work. But the company that's making the most amount of money is Nvidia, because Nvidia is selling the shovels in the gold rush. And anytime you have a major trend, it's normally the best not to try to pick winners, but try to pick some kind of a company that will do well no matter what. And this is the stocks I'm going to talk about today, which is Ouster. Ouster is up 104% year to date. I'm going to tell you if I sold it, if I trimmed it, and give you my fair value on the stock in general. Ouster sells sensors, a lot of LiDAR sensors, and even cameras for physical AI, robotics, and so many different things. Physical AI can't really happen without sensors because a lot of those robotics, a lot of those humanoids, anything that has to be automated, which is, by the way, the next phase of AI. So a lot of people are still looking at Nvidia, looking at Nibius, looking at all those stocks, but those stocks have mostly played out as the first phase of AI, which is training models, doing all those things, has mostly played out. This next phase of AI is physical AI. And I believe a lot of those stocks are still in their early innings. And I think Ouster is still in its early innings. So this whole trend can't really happen without sensors, because any of those equipments, they need to sense, they need to see where they are, and they need sensors for that. And Ouster is selling the sensors. They sell them to robotics such as Serve Robotics. Maybe you've seen those delivery robots. Well, they need a sensor to go around, and they buy those sensors from Ouster LiDAR. The second one is in industrial, a lot of mining equipment and other forklifts and other things. A lot of it is being automated, and Ouster does sell a lot of sensors to Amazon. Their latest robot does have an Ouster LiDAR sensor, so they have a good partnership with Amazon, and they even have warrants on Amazon, which I'm going to talk about a little bit, but this is another area for them. Then they also have smart infrastructure, where they actually won a contract to use those sensors in many of the cities for the World Cup and monitoring a lot of the traffic. But this is an amazing business for them, because it doesn't only provide them with hardware revenue, but also with software revenue, as you need a software from them to be able to monitor the traffic and to access the sensors much better. So that provides them with high margin recurring revenue. And they also have the automotive segment. They're not big in automotive. This is where they have a lot of competition from Chinese LiDAR and other LiDARs, which I'm going to talk about. But this is another area for them. And they've been trying to expand over there with the recent launch of the first ever colored LiDAR in the United States. That hasn't happened before. Ouster came up with colored LiDAR. The industry is going crazy, and they're getting a lot of orders from a lot of important partners, such as Google, May Mobility, Nvidia, Serve Robotics, and there's so many partners for Volvo, even for their commercial trucks, the automated commercial trucks. They use Ouster LiDAR. If you've ever gone on Google Maps and you looked at any map and some kind of a street and you're wondering, how does this picture look so amazing? Well, this mapping technology used Ouster LiDAR sensors. So those are really popular sensors. Now they have them as colored sensors. And the strategy with the colored LiDAR sensors is they're actually cheaper than the previous version. And the company's goal isn't really to maximize profitability on those sensors, but it's to maximize volume and pretty much kill the competition, because the competition are still on non-colored LiDAR and they're more expensive. Ouster has colored LiDAR and it's cheaper. So why would you use some kind of other sensor? So this is the company's goal, and I believe they will crush competition like Innoviz, AEVA, and a lot of other companies. Now, whenever I first bought the stock at $21, now it's sitting at about 47, but I bought it at 21 and I showed it on YouTube. The main counter argument is that the company has no moat. It has no competitive advantage because anyone could just make up those sensors. And it makes a lot of sense. But my argument was, if it has no moat, then why is their gross margins 43%, guys? Like, if a company has so much competition, you wouldn't have such a big difference between the price they can charge versus their cost of sales. You would have 5% gross margins, 10%, 15%, but 43% gross margins? That tells me the company has some kind of a technological advantage for them to be able to charge much more than what it costs them to produce it. And this is why they have 43%. And I was right on this side, as it has a competitive advantage, mainly in technological advantage, especially right now with colored LiDAR, which no other company has in the United States, and so many different things as they specialize more into robotics and industrial LiDAR, which is different from automotive LiDAR. Not all LiDAR sensors are the same. Now, you also have the Chinese competition, which is a big one, as China has a lot of those cheap sensors. They're very cheap and are actually really, really good. They're very effective. But this is where this company is in an interesting spot, because US courts, as an example, they banned HESI from the United States for any kind of industrial applications, military applications, national security applications. HESI, which is the biggest Chinese suppliers, has been blacklisted by the Pentagon because it has been contributing to the Chinese defense industrial base. And Ouster is the only company, I believe, in the United States, the only company that is Blue UAS approved. And what this means is that they are approved for any government, military, national security applications. And after June 30, 2026, which is pretty much 8 or 10 days from now, those kind of government entities will no longer be able to use any LiDAR from China, from Russia, and from North Korea, because there's a lot of fears that it could be using it to hack them, monitor them. And Ouster is the only one that's approved. So this is a massive, massive catalyst for the company. But there's even a bill that's being introduced. It hasn't been voted on yet, but it's being introduced to ban Chinese LiDARs by 2030 from everywhere in the United States, even in electric vehicles, self-driving cars, because there's fears that China could hack them from space. So who's the biggest Western LiDAR manufacturer? It's Ouster. So this is, again, a beautiful spot where the company is in. They have a technological moat, but they also have a moat of being in the United States, which shields them from competition, kind of like how Tesla is shielded from a lot of the car manufacturers from China. Now, in terms of the company's revenues, they have grown revenues really, really well. Pretty much every single quarter has been great, but unfortunately, shares outstanding have also been growing a lot. It has been growing at about 2 million every quarter, and this is because the company wasn't really profitable. It's been unprofitable. It's been improving in terms of losses on a per share basis. Now it was losing 55 cents in 2024. Now it's losing 28 cents. And the CEO guided for profitability in Q3 to Q4 of 2027, which then I believe if it does become profitable, they won't be diluting as much in stock, which would be really good for shareholders. Then you also have Amazon, because Amazon buys a lot of the Ouster LiDAR, and as they buy the Ouster LiDAR, they get a lot of warrants on Ouster. Now they have about 5% of the market cap if they do exercise them, and they're now in the money at $50 per share. So if Ouster maintains a $50 per share price, Amazon might decide to pretty much execute those warrants, and then Amazon would own 5% of Ouster. So that's a pretty good deal, and they would get more exposure to the stock as people discover the company and they say that Amazon has a stake in it. And if Amazon is invested in it, Amazon is more likely to use Ouster LiDAR versus using other LiDARs from other companies, just because they're a little bit cheaper. So this is also another catalyst that I'm watching for over the next few months, although it will cause some dilution, but it will also give the company a cash influx, about 200 million, I think, for them to use them for whatever they decide to use it for. Now, in terms of the company's guidance, they're guiding 30 to 50% annual revenue growth and only 5% increases in operating expenses. So this is how they get to profitability profitability by Q3 of 2027. The stock right now is trading at about 12 times enterprise value to sales. When I shared it, it was trading at 6 times. Now it's trading at 12 times. So the question is, did I sell Ouster? No, I didn't sell Ouster, but I did trim 10% of my stake. This is all I did. Once the stock got to about 47, I believe, I trimmed 10%. Just it's more of a mental thing for me, where if I know that I took some kind of profits, it's easier for me to hold a little bit more. I mean, the stock is up 100% in 4 or 5 months. So I think it was a good deal to take profits, but I don't believe that the company is done over here or the stock at all, which is why I only sold 10%. Now, this is my valuation model on Ouster, and I came up with this infographic, which I believe is a little bit better. I used their 2025 revenues of 175 million, and I put in 35% CAGR or revenue growth for the next 10 years. Now, I think 175 million is nothing for Ouster, and now they have exposure to humanoids with the cameras, with Amazon, with a lot of, and we're just early in physical AI in general. So I don't see how they don't grow 35% a year from a base of 175 million. So I think this is highly achievable. If that happens, we get to about 3.5 billion, and I used 5 times sales and 10 times sales as exit multiples. If we get 5 times sales, we get about 500% on the upside, or about a 6x from today's prices. If we get 10 times sales, which I believe is highly likely in this case, we would get about an 11, 12x, or about 1,000 or 1,100% on the stock over the next 10 years. So I think in the near term, the stock is a little bit rich, a little bit overvalued. I would not be surprised if we see some kind of a pullback. I think the pullback would be a generational, or I should say a buying opportunity. And if it gets to the 30s, low 30s, I think this is a much better risk to reward setup for newer investors than buying it today at $47 or $48 per share. And the way I do it is I start a small position and I dollar cost average in the stock. And I'm a big believer in physical AI, that it's the next wave of AI, it's the next big trend in the market. And I personally have 4 different physical AI stocks other than Ouster. One of them is in rare earths, one of them is in a lot of the actuators, which each humanoid uses 30 to 50 actuators. So this is a big area, and it makes up 60% of the humanoid cost. Then I have another company with a lot of warehouses that has their own in-house capabilities that is giving them a lot of efficiencies. And I share everything I do in real time, by the way, whenever I buy or sell something. And this is the link if you're interested. So thank you very much for watching. It was not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.